can you ensure a filled position is held over the weekend? Well, let's find out with Bernhard Schicht, information technologist with Stash GmbH. So, Bernhard, how is it possible to use a weekend hedge in trading?
Well, Sam, this is a very dangerous part, the weekend. You need something to protect yourself because there's so much risk in the weekend. You have a lot of liquidity, especially in the euro-US dollar, but on the weekend there is no liquidity, there's no trade, so there's no market. There could be a large gap.
Okay, so how important is trading protection then, in that sense?
Trading, it's so important because you don't want to lose by the weekend gap. A weekend gap, let's say in the Greek bailout vote on July the 5th, 2015, the euro-US dollar just slumped down like more than 100 pips. And you did not want to be long in the situation. So it's important to close your position or to go into a weekend hedge before the weekend starts. And there's another very important subject. You don't want to lose money by a margin cut. The bank here, they do a margin cut in front of the weekend on Friday 18 GMT or UTC time, same. And what happens then, they reduce your margin, your leverage by what you have on your account down to 30%. So this could cause anything like a margin cut or close position or even a margin call. And this has to be avoided.
Okay, so why is weekend hedging also known as insurance hedging as well?
Oh yeah, normally you have a strategy running on your account, or you trade discretionary. You take all your long and short positions from one instrument. You count the volume, and then you go into the hedge, the weekend hedge, hopefully before the margin cut, 18 o'clock, or before the markets close at night, 21 or 22 o'clock GMT time. So what you do is you just go flat into the weekend. Nothing happens. And then on Monday or Sunday, when the markets open, you close the weekend hedge. So it's called insurance because anything could happen during the weekend. You could have won a lot of money because you were in the right direction before the weekend, but you could have also lost a lot, and that's your insurance. So either way, you are just flat, nothing happens, and your strategy just continues. And it's not, you don't stop the strategy by your hedge. That's very good, very beneficial for you.
Okay, so perhaps it's a simplistic approach to think so, but is it not then preferable just to close your open positions before the weekend?
No, it's not. We spoke about the strategy. It was tested like over years, months, and you found a working strategy. And of course, it looks at the strategy patterns, at the chart patterns. I mean, or it looks at the mathematical system of chart movements or candlestick movements, and they can happen anytime. The thing is, you want to cut out the weekend. So the only way to do this is to make a weekend hedge, because the strategy just continues all the time. It does not care about the weekend. You hedge the weekend and you just continue on Sunday when the markets open, and that's very beneficial for you.
Okay, Bernhard, thank you once again.
Thank you, Sam.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.